get started, if you don't know how to chat, you go down to to individual user, and that's how you will type a question to me. Gonna get started here. People come in late. They come in late. It's 4:03. Good afternoon. So today we're going to talk about my favorite topic in the world, gaps, and of course shorting. So market took a tumble this afternoon, which again, it's funny because the market was dead this morning. Like around 12 o'clock, I was like, okay, this market's dead. And then it tanked, which was great. So again, when I trade, I'm looking for trades, mostly in the morning setups. But if I'm in options or something, then I'm watching what's going on throughout the day. I do day trades and I do options as well. So today we're going to talk about technical analysis, which is very important, and specifically advanced technical analysis. And we're going to talk about advanced technical analysis in gaps, okay? If you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. Today is Wednesday. So we have 2 more trading days this week. You can feel free to call me. Probably the best time is after 11 a.m. Eastern time because I trade in the morning. And if you get my voicemail, leave me a message. I will return your phone call and call you back. I'm super busy, but I try to get back to people within 24 to 48 hours, usually the same day. I do appear on TV. It's interesting if we end up crashing tomorrow or by Friday to see if anybody reaches out for me to be on TV to talk about this. Of course, the bond market today is what caused the sell-off. But tonight we have the vote on the bill, which who knows? Who knows if the market's going to react to that? Who knows if they're going to make a decision on that? Who knows what's going to happen? The one thing we're talking about this week in the trading room was that, Scott Bessent has done a wonderful job trying to calm markets. He's a Treasury Secretary, and I've had to talk about him on television. I think he does a great job on TV. But he cannot control the bond market. He cannot control the Fed. He cannot control interest rates. So he's probably going to be on TV like tonight. He's probably on as I'm talking right now. He's probably on some show, or will be tomorrow if we sell off. But there's there's other things that are happening. The administration really can't control everything, and there's a lot going on right now. And I like to short. I love to short. I short the market sometimes, but mostly I'm shorting stocks. Again, we're going to talk about some of the plays we've done recently today as well. But trading really is a great summer job because of the fact that you don't have to sit at a desk for 8-10 hours a day. You can trade quick, be done early in the morning. Again, I am in options that I don't take and get out of in 5 minutes. But you can set a time, check them at lunch, check them on your break, check them at a certain time. You don't have to sit and stare at your screen even if you're in options trades. Or if you're at work, you could just put a sell order. So we're buying puts and selling them to exit. We're buying calls and then selling them to exit them. So we're buying them to enter, selling them to exit. You could put a sell order if you're busy or doing stuff. You don't have to sit, work 40 hours a week. So trading makes it a nice schedule. All throughout the year, but particularly in the summer when nobody really wants to be sitting, staring at a screen. Anyways, like I was saying, I like to short, but I also love to make money. In fact, I get very frustrated when I take a trade and lose, particularly if I'm right. Particularly if I'm like, I know this is going to fall. I know this is a good one. I have 100% conviction. And then I might get stopped in it. And then I have to do what's called a retake. But, I'm one of the best people to follow because my goal is really to make money. That is what I'm 100% focused on. That's what I like to do. And not only that, I like to make a lot of money. I don't like to lose. So, if you get in the room and you follow me, following me can help you gain the conviction you need to trade because I'm very, much black and white when I'm looking at something, or when I'm going after it, I should say. But it does require a positive attitude to trade. This year, if someone could go back and rewind 6 months back to the election, June is, no, we're at the 6-month period now, actually May. Beginning of May was 6 months of the election. Hard to believe, really hard to believe. But look at where we've gone since then. I mean, if someone would have said what would have happened 6 months ago in the market or in some of these stocks, the way they look, probably no one would have been able to predict it. You know, not even the reaction the market had with the tariffs or the reaction the market had with the pause. So things happen sometimes. Sometimes they work in your favor, but sometimes they don't. And you can't control everything. And I think that's an important part of it. That's why when we take a trade, we have to put in a stop. We have to look at our risk. Your risk should be the same or equal in every single trade you take as far as dollars and cents. So your contract size might be different or your share size might be different. If I take a trade, I'm looking to take a trade, and if something costs $30 for one contract, for example, if you're not spending $3,000 an option, you can't do it. It's got to be $3,000, $3,000, $3,000. Or again, if you're doing a day trade, for example. So a lot of times people don't understand how important sizing is, but it's very critical, because if you take two trades, one works and one doesn't, one winner and one loser. If the one that wins, you undersized, and the one that loses, you oversized, then you're screwed. So again, you could have a 50% win ratio in that example and be totally upside down, even if, say, the winner was like 300%. So it's very important to keep your sizing correct, and you can buy a calculator. I'm good with math, but if you're really bad with math, you can always buy a calculator and figure it out that way. Anyways, getting back to what I was saying, in order to become successful, you need a system and a niche. My niche is gaps. Many of you have been following me for a long time. You know I do gaps. You know I short. If you're new, I'm telling you this is what I do. And again, I've been doing it for a long time. So I started trading in 2008. It took me about 3 years to develop my system. But, once I did, there was really no looking back for me. And I've never even wanted to do anything else. Never even thought for 2 seconds about doing anything else. A couple years ago, I'm talking like 7-8 years ago, someone was trying to talk me into doing Bitcoin. And I just wasn't interested in learning how to trade it or getting into developing a whole nother system. I opted then to just continue to trade the system that I have now and just increase my size. And again, for those of you that, are familiar with the options that I do, the options letter is a very active letter. We're doing a lot of trades. There's no reason really to do anything else. We're active. I'm an active trader. Anyways, as I was saying, you can make money in the market. You can. It's just that a lot of times people feel frustrated and they're not, and then they try to figure out why they're not losing. Then they get frustrated. They want to blame it on the system or the market or say that it's rigged. It isn't that way. The system is set up that every time you lose, somebody else is taking your money. And every time you win, you're actually taking somebody else's money. That's just the way the system is. There's nothing that's actually being created or developed or sold as a product. It's the people that are the smartest win. Again, one of the trades we did recently, let me see if I can pull this up here. Can you see the chart here without me going back and forth? One of the trades we did recently was this UNH, which I am going to talk about a little bit later. But this had a scandal, which is ongoing here, that the DOJ is investigating them. The Department of Justice is investigating them for Medicare and Medicaid fraud. They denied it this morning, which created the stock to rally. We'll see. But anyways, long story short, you kind of wonder, looking back, that news didn't come out till last week, whatever day it was. I think it was this day, actually. But you kind of wonder, looking back now, did somebody already know about that? Because really, if you look back in April, the stock was all the way up here. So in 4/11, the stock hit a high of 606.36. Wasn't brand new all-time highs. But when the market tanked, with the whole debacle with the tariffs, this wasn't tanking. This wasn't tanking. And then it tanked here. Now, this was a while ago. We're going to talk about some trades in this week. But anyways, you sort of wonder, did somebody know something there? And again, long story short, it's kind of like we don't know that information. We'll never be privy to that information. What we can know is what I'm going to talk about today, which is technical analysis, which is basically just price reading. So I'm doing price forecasting. So technical analysis is looking at past price data to forecast future price data. Like, I don't know what's going to happen tomorrow. I have an idea, but I don't know exactly. I don't know exactly where the market's going to open tomorrow. I don't know exactly where this is going to open either. But anyways, the thing is that people that are trading the market, professional traders, big traders, hedge funds, sometimes they know things before we know them. It is reflected in the chart, okay? And that we do know, and that we can see, and that we can use, and that we can make decisions about. And that's real and verifiable, and there's no arguing about it, and so on and so forth, okay? Actually, let's pull up the market. So again, could you have predicted today the reaction of the market or what the bond market was going to do? Maybe, but not necessarily. But now you're seeing it. Now you're seeing the sell-off here that happened, that hit like around lunchtime. And you can see it. We can all say, oh, yes, we sold off today. We closed red. So again, I'm a chartist. Like the genius in my system is I can look at something and say, well, based on this, it's going to go here. Do I like have insider information? No, but I can see it and then make a decision to take a trade or not take a trade based on the gap. So I developed this system. It took me 3 years to do it, to get up in the morning and look at the gap, rate it to determine if I want to short something or go long something. Now, today we're going to talk about shorts because I'm mostly short. But again, it's looking at what happened before today, because tomorrow didn't happen. So again, I can predict what's going to happen tomorrow or on the live day in the morning when I roll out of bed tomorrow morning at 6 a.m., but I won't know for sure if I'm right until after I take the trade, see if the trade plays out. But that's the same case with anybody that takes any trade at any time. You don't know. That's why we have to size ourselves. That's why, like I said earlier, you have to be consistent with your risk. You should never risk your whole account in one trade or one day or 1 week. You should never, ever do that. Any questions here? I see some people coming in late. Go back to the slide. Any questions? So anyways, getting back to what I was saying, you need a good system to succeed. You have to follow it daily. And if you do, you're going to be okay. Through the ups and downs, even when you have a bad day, and I have bad days. Sometimes I have a bad day or something's off or maybe I'm tired or I'm not focused or whatever, but it should be few and far between. Every day should not be a bad day. You shouldn't have a bad day every week. You shouldn't have a lot of bad days. It can happen to anybody. That's one of the reasons why actually I tell people don't trade when you're sick. Because when you're sick, you're not going to be focused. If you're angry and you had a fight with your spouse, for example, you shouldn't trade that day either. You should wake up in the morning, be totally 100% focused. Get up early, have breakfast, be ready to go. And that's how I look at each day. And I try to look at each day just to do one trade. I mean, there are times when I do multiple trades if I see something's moving. But I prefer to do one thing, in and out, and be done. Again, like I'm hitting a target. And that is, if you look at it like that, then trading becomes a lot more honed in and a lot easier, where you're not like all over the place, you know. Now, again, I'm very active doing options, but I'm not in and out of those in 5 minutes. So it's like you could put an option on and you could be in 2 things or 3 things or 5 things, and you don't have to stare at your screen like all day long. With a day trade, I'm in and out quickly, okay? Again, between 9:30 and 10. But I'm trying to find, using the charts, using technical analysis, by looking at the price and saying, well, who's in control? Are the bears in control? Are the bulls in control? That's it. You only have 2 picks. That's it. Either the bears are in control or the bulls in control. You only have 2 choices, okay? You say, well, wait a minute. I thought the bulls were in control, but now I think the bears are in control. No, you only have one. Either the bulls are in control or the bears are in control. That's it. So again, if the bulls are in control, what's going to happen? A stock's going to rally. It means it's getting bought. Institutional money is buying it. The price should move up. You can make money going long or buying a call. If the bears are in control, then a stock or the market will sell off, fall. And again, as active traders, as day traders, we can short. We can short. So you can short on margin with taking the shares, or you can buy a put. You can buy a put. A put is a short. And again, when the bears are in control, then you're looking for the stock price to drop. And again, one of the reasons that I prefer to short is because stocks fall much, much faster than they rise. In fact, point of fact example, I was going to show you this Apple today. This was a good read on this. This completely tanked, completely fell off a cliff. So around 12:30 in the afternoon, right in here, snug as a bug, came all the way down, boom, set the low of the day at 3 o'clock, almost got to 200. Beautiful, beautiful, beautiful move. Again, this is an example of institutional money. We were reading this, and I thought this would sell off. I have had a lot of conviction this would sell off, and today it did, and it just tanked. Boom. So again, selling happens quick. This move happened, boom, like that, out of nowhere, like that. And that's really, again, how you can have big trades. Because you don't need a huge monster size to take something. If you get a $5 move, or a $4 move, or a $6 move, or whatever, if you get a big move in anything, no matter what it is, you can have 100 shares. You can make $500. If you had 500 shares and something goes $5, guess what? You can make $2,500. If you had 500 shares of this today, you could have made $2,500. That's with no ads or anything else. That's a lot of money. That's a lot of money. And particularly with that size, the size isn't even that big for 500 shares. You follow me? So it's not just the fact that I like to short for the speed of the drops, but also, again, I think you get bigger moves with shorts. So they move faster, and I think you get bigger moves. Again, market's another good example. I'll bring that up in a minute. And any questions as we go along here, let me know. So you want to focus on fast moves, focus on the volatility. And you say, well, I don't know what you mean by volatility. Volatility could be selling or it could be buying. You know, we've seen so much volatility in 2025. We've seen it in both directions. Again, the pause day with Trump was a day of volatility, but it was to the upside. So it's just like, you know, volatility is something that happens that's totally unexpected. That's like, today you could even say that. You're like, wait a minute, what the hell just happened here? The bottom fell out of this market. Again, it was unexpected to a lot of people, okay? Some people could say today was an overreaction. Like if Scott Bessent's on TV tonight, that's probably what he's going to say. But let's talk more about gaps and, again, technical analysis. So again, we're always going to the left, to the left, to the left, to the left. There's nothing to the right. You don't have any prints for tomorrow. Tomorrow didn't happen yet. Today is Wednesday, tomorrow's Thursday. So you always are going in technical analysis, you're looking at the past. And then you're using that information to try to predict what will happen in the future. So again, let's talk about what is a gap. A gap is the difference between the close and the open. Simple. Does everything gap every day? Pretty much. Well, then how do I know what to do? Well, again, I developed a system where I'm rating it using 26 points to determine if I want to take the gap in the direction of the gap or not. I'm never reversing it. So if I rate something that rates bad as a short, I'm not going to flip it and go long, for example. I just don't do it. I just won't do the short then. So stocks gap most every single day. It's just they're not all good. And again, we're at the very, very end of earnings season right now. Things are gapping for non-earnings reasons right now. Apple was a gap, but it had nothing to do with earnings. Not every gap is a good gap or what I call a golden gap. I'm looking for the gaps that are predictable. Again, how am I doing it? Using technical analysis. So how do I do it? I use my gap rating system, which is based on technical analysis, which is what I teach in my class. And it's something you can learn. So it's not like, oh, you have to, read the earnings report and you have to follow the bond market and how many bought this and what happened here and what happened with the earnings and what did target earnings say, targeted earnings today. You wouldn't even have time to do all the analyzation. You wouldn't even have time. And you're never going to know half the stuff that half the people do that are taking these positions that run hedge funds anyways. You can see when a fund is going to buy a stock. You can see when a fund is selling the stock. And again, how do you see it? You see it in the gap. Can you buy, let me go back to UNH. Can you buy every bullish gap? No. Can you short every bearish gap? No. Can you short every bullish gap? No. Can you buy every bearish gap? No. So it's not that easy. So people want to trade gaps for gap fills. You can't just trade it to fill the gap. And by the way, UNH didn't fill any gaps, okay? But it doesn't mean you can short it every time it falls either. So that's how I ended up developing a system to say, these are the good ones. These are the ones that have a high level of predictability. So that's what I mean by when I said it's the good ones. Like this has, I said, well, this has a high level of predictability. And that's what the ones that I narrowed it down to try to take and do. Oh, here was the Apple. Yeah. So we've been doing this, like this has been on my watch list for a week. So again, this is closing here. Then it ended up gapping down here, fell. Okay. Closed here, gap down, fell. Closed here, gap down, fell off a cliff. Okay. So again, if you were watching this today, of course the whole market fell today, everything fell today. This was really, really good today. But again, it had a gap. So again, we were already short this actually. But this is something that we were like, okay, fine. Let's find a bullish gap here. Here. Wait, no, that wasn't a bullish gap. Here's one. Stock closed here, gapped up. Now, I didn't go long this, but I just want to show you a bullish gap. This technically, if you did go long here on an option, on a call, had a pop here. I don't know what it would have been worth, but it would have been worth something. If you didn't exit the call here, though, you lost. Like, you would be losing if you did it even out till this Friday. It's a bust. It won't make it in 2 days back up in there. I didn't do that trade, but I'm just showing an example there of a bullish gap, which was this day. This actually was kind of neutral here. So again, there's gaps all over the place. They're everywhere, all the time, every day, but they're not always ones that I want to do. So again, I don't want to do this one, and I didn't do it, but I did this one, okay? And then it fell. So I'm looking for momentum in the gap to make money, okay? So let's explain the momentum. So say if you have 1,000 shares of a stock and you short it and it drops $1, if you short something at $200 a share and it drops to $199, and you have 1,000 shares, it'll make $1,000. If you short a stock and if the stock price is $200 a share and it drops to $199.90 and you made 10 cents and you have 1,000 shares, what are you going to make? $100. There's trades like that all the time everywhere in the market that don't have a high win ratio. Like almost every 1 minute or 2 minute or 5 minute bar on almost everything that trades, unless it's a penny stock, you can get a 10-cent move in something. But you're never going to make thousands and thousands and thousands of dollars. And your level of accuracy still would have to be good for you not to lose. Because if you take 10,000 shares of something, like I'm saying, if you want to make $1,000 just to get 10 cents, that's a hell of a big position to take a day trade in to make just 10 cents, and it's just not worth the risk to reward. Do you understand what I mean? And I find a lot of trader, what they do is they are taking, you know, they're doing what's called scalping, which isn't what I do. They're not trading momentum. They're trying to get 10 cents, 15 cents, 20 cents, and then they quick it out of it when they're up a little bit, and then when it moves against them, they quick it out of it, but they still can't get quick it out of it quick enough for them to actually like cover the loss where they are ahead with the winners. Because even if they kill it, they might take a trade, make 10 cents, then take 2 other trades, lose 5 cents in one, kill it, lose 5 cents in another kill it, and then all of a sudden they're break even. You follow what I mean? So again, the idea of momentum is something that you really have to focus on when you are trading, because it's the only thing that really makes it worthwhile to take the risk. You know what I'm saying? Any questions? So let's keep talking about this. We're talking about technical analysis. We're talking about UNH, which is a nice short. So again, what is a gap? A gap is the difference between the close and the open. So this closed up here at 4 o'clock, gap down here to 9:30. Again, The stock market always closes every day at 4, opens every day at 9:30. Okay? So this closed up here around 370 and change, gap down here, opened around 330 something, and then it fell. But this is a gap. Okay, this is a bearish gap. So we did a day trade. Oh, this was 5:15. Let me go back. Here's the gap of the day that we're going to talk about the trade, 5:15. Stock closed here, gap down, open, dropped. This came all the way down to 250 this particular day. That was again on 5:15. Here was the trade. 275.10 was the entry. Exit was 270.20. This went to 250. It went to 250. I want to point that out. So again, I like to trade in the morning, fast in and out, but you could have stayed with this trade. You could have made another $20 in it. I was in puts, and I think it's easier to hold puts. But anyways, you could have held this all the way down, another $20. You would have needed a margin account to do this trade. Again, everything I'm doing is based on charts. This right here, though, is a 1-minute chart. So again, part of the genius of my system is I'm looking at the daily to make a decision of the direction. Do I want to go long or short? Who's in control, the bulls or bears? And then I take the trade on the 1 minute. Okay. Now you can do this as an option. You could have bought a put. We did do puts. We were in puts going into the day in this. But again, if you want to do a put as a day trade, call it a day trade, whatever, get in and out of it in 5 minutes, you could have done that here. And you could have made money and you could have done it. If you didn't have margin or you didn't have buying power. And there are some people that are doing that room. So you can make that work for you. I'm just saying that's not how I trade options. But again, I'm reading this based on the price action. And I'm saying who's in control? Well, the bears were in control here. And the bears were in control here. Okay? As evidence of the fact that it sold off. Any questions? How's everyone doing? Can everybody hear me? Hello. I see some new people. I see some old people. John said I'm good. Dan gave me a thumbs up. Okay. Anyways, getting back to what I was saying, the key to day trading stocks really is using a system. And if you are like, well, I'm going to make a decision by reading the earnings report or whatever, what's your system to do that? Like, again, if you're in love with fundamentals, if you really want to do that, if that really is what your thing is, then fine. But then what's your systematic way to look at it? Because otherwise it's just like your opinion, or you're trading based on feel, or you're like intuition. Now, I have a high level of intuition myself personally. I'm very intuitive, but I don't make trading decisions based on that. I use the rating system. If my intuition says this is really going to go big, if I'm in UNH, for example, which was one I told people to hold to a bigger target and it worked, you know, like that's an overlay. I used the rating system and that told me the gap was going to work. It was over 20 points. So you can have an intuition to help you, but you shouldn't be like, well, I think the market's going to make new highs. I feel like it. Therefore, the spending bill is going to pass. I'm going to go long here. No, you will get in trouble. You will get in trouble doing that is my point. Because again, it's not something that you can replicate and you can do and you can even teach. So again, I have a system I can teach because of the fact that it's not all just my trading me on feeling. If I just use my intuition to trade, then I won't be able to teach it to anyone. Do you know what I'm saying? Like you'd have to have an x-ray, to read my mind every day. And no one would be able to do that, So you're looking, number one, to trade a system that sets up daily with a high level of predictability in the directional move. And then number two, trade a system that works independently of the market and does not need the market to work. Now, again, we had some huge shorts this year when the market sold off. We got that move, but I'd go long too. Okay, we went long after the election. We went long in November. We went long in December. I have no issue going long. I sometimes go long. I just prefer to short. But I really am trying to get trades. UNH was one. Apple was one where you don't need the market. Because the market can be tricky. The market can be very tricky. We've seen that this year. So again, success or failure has everything to do with the quality of your system. Very important to have a system. Very important to follow it. And again, it should be something that you can talk it through, that you can use and it's not just based on feeling. So again, like I was saying earlier, my niche is really shorting. I like to short. I like the fast moves. It's extremely important for me to get the big ones. So like whatever you want to do, if you're like, oh, I don't know if the fast ones, I can do the fast ones, then if you still like the idea of shorting, again, you can buy puts. And if you're not good at doing quick, fast day trades like that UNH that fell in 5 minutes, then you could buy a put and you just let it ride. You can let it ride for a couple hours, let it ride for a couple of days, whatever you want to do. I mean, you have to get out when you're up, you know. But the fact is that whatever your niche is, first of all, you need a niche. That's number one. If you don't have one, you need one. Whatever it is, you have to be like, oh my God, I really love this. I'm really going to get good at this shorting, or I love the morning, or I'm really good at targets, or I really like the 1 minute. Whatever it is, like if you got to get into something, like first you find a system and you use it and you learn it and you move forward. Then you got to have your niche within that system so you can really excel, you know, at it. You could be like, oh, I'm the best person in the world at this, or whatever it is. Again, if you want to trade like everyone else out there, then your results will be like everyone else. And most people lose. One of the reasons most people lose is because they are trading based on feelings. They're taking trading advice from complete and total strangers. Somebody, a trader that trades with me, did the class, John, I don't think he's here, emailed me an article tonight about a stock that we're in, and I didn't have time to read it. I just quick scanned it. I mean, it's amazing. There's a lot of Reddit chat rooms out there that are telling people and calling trades based on nothing. Like, and if there is a basis for the trades, no, people are taking the trades not knowing it. You know, they're just taking ideas from strangers. It's very dangerous. People, I don't care if somebody is rich or poor. Everybody wants to be successful. It's a shame sometimes when I see people doing crazy, crazy things. And again, be smart enough to know not to do the crazy, crazy things. Like, how are you going to be successful? If you really want to be rich and you really want to do this and you want to make a lot of money, then you can't do crazy things. I hate to say it. You have to be able to take risk. There's a difference. Doing crazy things is not what I mean when I'm saying taking risk, okay? You can't take risk for risk's sake. That's doing crazy things. Everyone says, well, you got to be a risk taker. No, you have to look at it with calculated risk. Obviously, you have to risk money in order to profit. You have to take risks sometimes in life, but you can't do crazy things. Because crazy things is like walking in the middle of the street in New York when the light is red. You get run over, you get hit, because the cab isn't going to care about you. He's going down. So again, you have to be smart about it. And again, you're never going to know all the things that all the professional traders and hedge funds know before they decide to take positions in trades or take these gaps. But you can be smart enough to say, you know what, I'm not trading anymore unless I have a system. I got to find a system, and I got to find a mentor, and I'm not going to do crazy things, and I'm not going to double down, because that is what a lot of people do. And then it's just no wonder why people lose. Anyways, if you want to have outstanding results in your trading, you need to be different. Just being practical would actually make you different, to be honest with you. Just utilizing a system, not veering off of it, which I'm kind of interesting. I will get on top of something, meaning a trade or a stock or a direction of whatever I'm doing, and I will lean into that like nobody's business. Like, I will even take a trade, losing it, stop, take it again, losing it, stop. I will just lean into that sucker knowing I'm right until I get it. You know what I mean? Like, I'm almost like to the opposite extreme where like I have so much conviction in the rating system to tell me the direction that I will just hammer something. Or if I'm doing it, I'll just do it, and make money in like, 50 trades in it until it stops working. Like I have so much conviction in what I do that I will just lean into something and knock it off of it no matter what, knowing that I'm right. The only thing that's tricky is the timing. That's the only thing that's tricky about timing and trading for me after doing this now for 17 years, because it's not always easy to get the timing right. And again, I was saying this the other week in some webinar a couple weeks ago. If I just ran a hedge fund, or if I just did trades and didn't have an expiration date in options, I don't know if I'd ever lose. Like, if I could just ride out moves and trades and just buy stocks or short stocks and not worry about timing, my win ratio would probably be over 90%. But that's not reality. That's not reality for me, and I'm not doing swing trading. I'm taking trades and options, and it has to work by the expiration date. And I'm taking a day trade, and I have the stop in, and it's got to go before 4 o'clock. Because if a trade doesn't go by 4, I'm not holding it overnight. But, my method is based on reading institutional money, and that carries through. It carries through for the short term. It carries through for the long term. I found this doing this, like I said, for a very long time. And that is the money that moves stocks. Not all gaps are made with institutional money, though. And this is one reason why people are often confused reading the gap direction. Like we're just talking about like certain chat rooms and things where people are sharing ideas. But it's confusing if you don't have a method to review daily to use, you're confused. You're like, I don't know, I'm confused. Is this a long? Is this a short? Again, this was the UNH play that we just talked about in the 15th. Again, this fell, we did it, we shorted it, we got to get out. I didn't hold this all the way down here. Did people buy this at some point? Yeah, they did. Was I buying this here? Hell no, I wasn't buying this here. So again, you could look at anything at any one point in time. You could look at a 1 minute, you could look at a daily, you could look at any time of the day on any time frame and say, well, I could have gone long this and I could have shorted it. No, you can't have conviction when you look at a chart and say this is a long and a short. You shouldn't be doing different directions, the opposite directions of the same stock on the same day. Why? You can't have 100% conviction this is a short and a long. You can't. And if you think like that, you're never going to get that level of expertise, that knowing. You're never going to be able to hammer something and know that you're right and be right and take the risk, the kind of risk that I'm taking in trading, and make the money if you're flipping it like a pancake, boom, upside down. And that's another mistake that a lot of traders make too. Like I'll never take a trade. If I take a trade and I short it and I stop, I never ever flip it and go long. And there are people that do that. Any questions here? I see some people that came in late. Any questions from anybody so far? Hello? Anybody there? Hello, hello. John's there. Everybody's tired? Okay, I'm going to keep talking. So my niche is gaps, but it's also shorting. So how can you make money shorting? You make money short when the stock price drops. Who can short? Anyone can short, as long as you have an account set up to short. And again, buying a put is a short. So you can open up an options account with $2,000. It has to be set up as an options account. It has to be set up as a cash account if you want to be able to maneuver in and out. If you open up a day trading account, you need $25,000 unless you go prop. You'll get 4-to-1 margin at a retail account, and you have to have it set up then to short too. Retail traders and professional traders both can short. You have to talk to your broker, find out more information. But getting back to what I was saying, selling happens fast. It happens quick. That's why I like to be done early in the morning. But you can get sell-offs in the afternoon. I mean, look what happened in the market today. It sold off into the close, which is beautiful. This was another one we did. This was 513, same stock, UNH, different day, different gap. Stock closed up here, snug as a bug, around 370 and change, and then gap down here around 330 and change. We shorted it, got the drop. Again, this kept going way after I got out of the trade. Entry was 336.95, shares was 800, risk was 48.40, exit was 327.55, profit was 75.20. Now, for example, somebody asked me this question earlier today. You don't need, for a margin account, does everyone understand? You have to have the buying power. That doesn't mean cash for cash. If a position costs $300,000, for example, that doesn't mean you need $300,000 cash. On 4-to-1 margin, you need 25% of that. If you went prop and if you were on 10-to-1 margin, you need 10% of that cash, or you buy a put. Now, again, we were already doing puts in this, but the thing is that you can buy a put, and you could trade the put as a day trade, even if it has a Friday expiration for a week out. If you don't have a margin account, or you don't want to pay the margin here, you don't have the margin. If you're like, oh my God, this is $336 a share, then buy the put, okay? But you have to still have the account set up to do options. Do I use a checklist for the QQQs, for example, just like a stock, and just decide which one is a better choice from a checklist? You can rate the market. You can rate anything that trades. Anything at all. I usually don't like to trade things that trade in another market, like ADRs, but that's a personal preference. You can still use it. You do not need $25,000 to day trade options. You don't. If you have it set up as a cash account, you don't need $25,000. So you have to call them. I'm telling you that. So if you don't have it set up right, you will get a flag. But if you have it set up as a cash account, you don't need 25,000. You can set it up with $2,000. So you don't have it set it up right. You have to fill out a form, call your broker, change it. So if you want to be in, out, basically day trading options, again, if you open up an account with $2,000, you're not risking $1,000. You got to risk, $200. But you have to set it up as a cash account. And the broker will do that for you. You fill out a questionnaire, should take a day. Well, if you want, I don't understand. If you have 25,000 or more, you could trade on margin and do options. So either you have the 25,000 or you don't. If you do, you're fine. But if it drops to $24,999.52, then you're under the 25. So you got to have really more than 25,000. I'm saying 25,000, but you can't have like 25,000 and 1 penny. Because if you do, then if you lose, like today, if you took a trade, you lost, you're like, oh crap. Now I got to send money and I don't have time and I won't be able to trade tomorrow. So again, you really need more than that. Okay, you need more than that. If you have the 25,000, then you certainly could do options. Set it up as a cash account, build that account up to 30, and then you can day trade on margin comfortably without stress, and then you can do options too. That would be my suggestion. If you've got the 25,000, but you're like right at the cusp, then don't stress yourself out. That's crazy. Call your broker, set it up as a cash account, do options. And just don't trade on margin until you build it up. I mean, 28,000 is fine. Risk $500 a trade once you get up to that. 30 is a good number though, so you don't have to really worry. But yeah, if you don't know you could do that, call them, because you can. So, any other questions? Again, I don't do the market every day because the market isn't a good gap every day. What would I have done here in the last week in this market? It's a big fat nothing burger. Like again, if you think that if you went long because you see the green bars, you would have made money. But if we had bought calls, one, they would have been expensive. It would have been crazy expensive because it's just like everything's expensive right now in this market because it's like woo, woo, woo. Anyways, unless you're doing like the dailies, which I don't do. But anyways, this, if we went long, we wouldn't have made money. And I wasn't short in here either because you can't short this the last week. So this was just a big fat nothing burger here. So I'm looking for individual things to do. Good questions. Let me know if you have any more. So anyways, like I was saying, summer is a great time to trade. Now, again, the weather's been crappy here in New York. So ridiculous. Rain today, freezing cold. I might turn the heat on tonight. It's like in the 40s here. It's ridiculous. Like Memorial Day is always 50-50. Sometimes it's warm, sometimes it's cold. But it is the official start to summer, and I do expect it to get warm in June. And we did have some 75, 80-degree days in the last month. I don't know what's happening right now. I think this is just like a storm rolling in, but I am looking forward to the summer. I live along Central Park. I love the park. If you follow me on YouTube, I have animal videos galore. I probably have more videos of frogs and turtles and birds than I do of trades now. And I don't want to be in the house every day sitting at a computer looking at the park from my window, watching the world go by and not enjoying life. New York City is famous for rooftop bars in the summer. People sit outside and have lunch. I don't want to work inside all summer. So again, it's cold right now and it's raining today and tomorrow. Hopefully the weekend will be better, but I've lived that life. Like that was my life when I did mortgages. I had no life. I worked 7 days a week. I worked holidays. Realtors were showing properties on the weekends. I had to get the loans approved for the realtors, for my customers. I had no life at all. It didn't matter if it was summer. It didn't matter if it was Christmas week. I just said, this is the number one reason why I really wanted to get out of that job was it was a terrible, terrible job to have a personal life. I can have a life outside of trading because the market closes at 4 and it's not open on the weekends. And that's one of the reasons why I have no interest in doing Bitcoin or Forex or any of those other markets. You have snowflakes in the Adirondacks. Wow. I'm not surprised about that, actually. I don't know what kind of front's coming in. That's interesting. I'll have to Google it. But anyways, the money's good once you know what to do. But there's something else that's always just kind of pushed me forward when I was struggling at the beginning and I didn't figure everything out right away, which I did not. It took me 3 years. I wanted a better lifestyle. Like it was like I was working a job where the lifestyle was just unsustainable. The mortgage industry was collapsing. I had no life. Even when the mortgage industry rebounded, you're still working all the time. You're at the mercy of banks to get loans approved. So this is a good lifestyle. You have to work hard to get to the point that I'm at, but I make it a lot easier for you because I'm teaching you a system that I developed that you're going to pay me for the information and my time to learn it. It's not going to take you 3 years. You learn it in a weekend. Now you're saying, well, am I going to know everything by the end of the weekend? Well, I'm going to teach it to you. If you don't understand it, you can come back and ask me questions, and that's the benefit of being in the room. It's not like I'm going to never take your phone call again. I will. You can call me. And again, I live in New York. I'm here. So it's like you can email me, you can call me. I'm a real person. I will break it down for you, help you understand it. But that's the big benefit of being in the room. So that's the whole point of saying what I was saying about having a mentor. Is earnings season a good time because of the volatility? Earnings season is busy because there's a lot of gaps. Because typically stocks gap on earnings. So it's a busy time. But I can't say that, like, again, I think that it's going to be, possibly dead Friday. But who the hell knows now with this thing happening with the bill? Like, it's kind of like at the point where I'm sort of like, is every week from now until the end of the year or the next 4 years going to be busy with this administration? I don't even know. So earnings season is typically busy because you have a lot of stocks reporting earnings, but we've had so much volatility and so many gaps that have nothing to do with earnings that I don't even know anymore. We could just be busy all year because, this is what it is. But I'm not going to complain. But I'm telling you, things can happen in your favor with trades to help your trades. But things can happen against you that don't work out in your favor with trades, which is why you have to take profits when you're up. You can't be a pig. And you also have to be aware of things that are going on. So you're like, okay, I have to put my sizing in here. I can't, risk all my whole account in UNH. Again, this was a nice move. But, you still have to size yourself. Looking back, I was like, oh shit, I knew that was going to work. I should have risked, $100,000. But you can't. You just can't. You want to, but you can't. Because what if it wouldn't have worked? You know what I mean? I still have to be responsible. Sometimes I know that I'm right. I know that I'm right. I knew Apple was going to fall. I said it in the room. We've been doing it every day. This is lower. This is lower. This is I just know. But it's I still have to size myself correctly because that's part of being responsible. The one trade I won't size myself correctly, if I ever would be the one that doesn't work. So you can't do it. Again, it's just experience, and I've been trading for a long time. It's again, you have to think of it like chunking it. When I say chunk it, it means take it, get the move, and book it. Take it, get the move, and book it. Chunk it out. Chunk it out. Gerard, who's in the room, who sometimes helps me if I have a day off or something, he calls it ABC, which is always be chunking, which is really funny. He came up with that, but that's we mean basically booking money. Christopher has a question. When the market goes to 24-hour trading and gaps disappear with no official system, what happens to your system? The market is not going to 24 hours trading. It's not going to 24-hour trading. I read something about that before. That's not going to affect anything we do. No, you do have pre-market and post-market trading right now in stocks and the overall market. So you have that. What you're thinking about is not going to affect anything that we do on a normal day. So you just misunderstood what's really happening there. So it's not going to affect it. And you have the futures market. It's not going to change market hours. Market will always open at 9:30 and it will always close at 4 o'clock. So what you're thinking of really sort of exists now. They're just extending the after hours. Does that make sense? So no, it's not going to affect what I'm doing because I only trade at 9:30 to 4. The market is not going to be open any different hours from me. Does that make sense? I don't know if that makes sense. But people are reading that and they're really not understanding what it is. Like, if anything, that might actually help me. But I don't want to get too off target about that, off topic. One of the biggest options shorts in the last week was UNH. Here's this one we were talking about, 340. So this is the one that we did with the first drop. These were sort of pricey. Now you could have done one a lower strike, $14, 7 contracts, risk was 9,800, sold at 80. Profit was 46,200 or 471% return investment. This is a good trade. This was one, called it on the 13th, got out on the 15th. Again, if you did one, you could have made $6,600. These are, types of trades that make small accounts. Again, I wouldn't risk $1,400 if you have $2,000 in an account. I wouldn't risk if you had a $5,000 account, I wouldn't risk $1,400 either. If you have 10 grand maybe in an account, 8 or 9, I'd say that's okay. But, you could have done like the 335s. I don't know what they cost, but you could have done something lower. Anyways, getting back to what I was saying, short moves happen fast. Short moves happen very, very fast and quickly. Why? Again, because this idea of panic. Like what happened today? The bond market created the selling today. And people panicked. Literally almost everything fell. Apple fell. Again, the overall market fell. Banks fell. Everything fell. So again, it's the panic and the fear idea. So how do I find the best shorts daily? How do I make the picks? I make them by rating the gap. So again, gaps happen all the time. They happen every day. And I prefer to short, but I do bullish gaps too. So again, I'm looking for gaps that are created with large institutional money. That is what makes the gap in the first place. The professional gaps that happen and play out in stocks are formed by one thing and one thing only: large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and confirm that the large money will flow with it. So again, that sell-off that we had in April, again, we were short going into that with the tariff thing. But that wasn't because I knew what Trump was going to say. It was because I had been rating the gaps. Do you know what I'm saying? So sometimes you can see something in there. You don't know. You don't know what's going to happen next. Like, you don't know. Like, we were in the UNH. I didn't know the Department of Justice was investigating them. But I saw the gap, and the gap rated good. And again, the whole point of technical analysis is looking at past price data to predict the future movement of it. Again, that's how you can make money. So the Golden Gap 26-point checklist is a trading system that is based on common sense. It's when you think about it, like you're like, oh, okay, if a stock moves up, then I want to go long. If a stock falls, I want to short. I mean, it's common sense. But a lot of people want to do very tricky things or flip-flop them, like a pancake. But it's also common sense, like I'm saying about the idea of shorting gives me an itch. I mean, again, not only do short moves happen quick and fast, sell-offs happen fast, they happen big. It's just, UNH is just a great example. The market was a great example, March into April. But when people get scared, they just, boom, there's just total panic, total catastrophe. Like, again, I don't know if we go all the way back down to the lows from April where we had that sell-off and then the pause date. I don't know. Maybe we set the low for the year, or maybe we go down there and we break it. But I know if we do go down there, like, look out below. Do you know what I mean? But Trump and Scott Bessent are going to try to prevent that from happening with rhetoric. But I think today is a good example where not everything can be controlled within the administration. Do you know what I mean? Now, talking about this, what if you have a small account? Can you still short? Yes. Again, you have to look into different types of accounts, the monies that you need, and you can trade with a small account. And I don't know why people are like against this. Again, there's nothing wrong with trading with small size. You can still make money trading small size. Nobody says you have to take any big size, and if you don't understand what to do and didn't take the class yet, you shouldn't take big size. You want to baby step it. You want to do well. We were talking about puts. Again, a put is an option. You can trade options, and I do. Here was the Apple one. This was not the current Apple one, but this is the one Apple one that we did We did the 210s. You could still be in this trade. I got out of it. I could have made more money in this. Let's look at this now. I don't even know what this was worth today. I paid $280 for this, did this last week. I got out of this on Monday. I could still be in this trade. Friday is the 23rd. I got out of this. Let's look at this. I don't know what this was worth today because whoa, look at that. Whoa, what the heck is that? I could still be in this trade. Again, I usually don't go back and second guess myself. Like we were talking about chunking it, chunk it out. I took the trade, I got out, but look, I would be up more. So I don't know what this was worth, but this is almost $10 in the money here. But this was a good move here. This was a good move here. This was almost $6 into the strike. It was a good move, and we did it early. We did it here. We did it above 210. But I could still be in this trade, and I would be up more. People always ask me that. I don't always get the best exit in my trades. I'm trying to book money. I'm trying to make money. That's what I do. That's what I care about. You can't ignore a trade like this where you're up more than 100%, especially going into a week before Memorial Day week. But anyways, what if you did 4? Could have made $12.80. Again, $1,000 I think is a good, solid risk. I mean, not every trade we do costs $14, $15 a contract, and you could have done a lower one, like I said, and got out of it. But on average, you should be looking to spend 1-to-1. I think 1-to-1 is good. Again, I was happy with that with the Apple, but I could have made more. That's at least 300% probably. I should look at that tomorrow, what it's worth. Anyways, the rating system that I developed looks at 26 points of the daily chart of a stock. The rating system is a checklist. The checklist tells you what to look for in the price of the stock to read direction correctly, to know which stock to short and when. And again, it's very important to have a positive attitude. Extremely important to have a positive attitude. If you have a negative attitude, you're almost working against yourself, and you already have people working against yourself that are actually out there trying to get your money to trade. So if you're working against yourself and all strangers in the market working against you, then no one's on your side. Then what do you expect? You're not going to make money. You're going to lose. I know sometimes it's hard. We have to pump ourselves up if you're having a difficult week or a day or things seem to be choppy. But that's what you got to do. That's what you got to do. Or you step back, take a break, say take a day off, come back, and then go for it. Because having a positive attitude really can make or break you, as also with the system. And again, get the proper education so you can do well and rely on a mentor. So again, I mentor people. I think I'm very good at explaining things and teaching things. I might talk fast. I talk fast in my personal life. Like, this is just how I talk. But I do my best to answer everyone's questions and really try to break stuff down for people. And I was talking about this at the beginning, and I said, you got to take risk for risk's sake. It's not about just taking blind risk. That doesn't work. It just flat out doesn't work. And even if you do it one time, if you do it 10 times and it works, and the one time you do it, you're going to get burned and you can give all the money back you made in the 10 trades that worked. You're going to get burned if you do this, if you just trade like a wild bandit, because you have to have a reason for doing the trades and you have to keep your risk consistent. So it's ideal after you take the class, if you want to sign up, to create a plan of action to achieve your financial goals, whatever amount of money it is that you need. You say, okay, I want to make this much money per day. I want to make this much per week. I want to make this much per month. Anyways, the rating system measures gaps or rated them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, big move in the day, early confirmation of the bias of the move between 9:30 and 10, and precise entries with follow through, and a good risk to reward target potential. So I teach my method in a class once a month. The class for June is in a couple of weeks. The Golden Gap System is a 26-point professional gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. And this checklist tells you what to trade when and in what direction. The 26-point checklist predicts directional bias in a stock. And this is all I use, okay? And again, nothing's going to change when the market goes 24 hours because the actual open and close of the market hours are not going to change. And if anything, it probably will help me. Why? Because you're going to have more volume. We're going to have more volume in the market with the 24 hours. So it's probably going to help me, but it's not something that I'm even going to think about because I'm not going to change what I'm doing because the market will open at 9:30 and close at 4 no matter what. Any questions here about anything from anyone? How are we doing? Anyways, one strategy is all you need to be successful in the market. You do not need a general overall broad-based view to make money. Tons of people have that and fail all the time. Learn how to read institutional money and price patterns and gaps, and you don't need to do anything else. Because if your reason for doing this is to make money, this will make you money. I don't use delta. If you want to use that and it helps you, fine. But I rate the gap. If the gap rates, if I rate Apple and it rates over 20 points as a bearish gap, I'm buying a put. And I'm playing the momentum in it. Same thing I'm doing in a day trade. I rate it and then I short it. So I'm using just the rating system and taking it in a different way, and then maybe looking for a bigger target in the option. But I'm momentum trading. It's momentum, momentum, momentum. So either the momentum comes in and I make money, or it doesn't. So whether it costs $2 or $10 or $30, you know, like the Netflixes were crazy expensive, and then I was like, shit, I should have done this. It worked, but I didn't do it. But anyways, when momentum comes in and takes something and takes hold of it, it's like an explosion. And it could be an explosion up or down, again, depending if it's a short or a long. But it's like, again, nothing's going to stop it. Nothing. So I don't really worry about the cost. I think about the cost as far as how many contracts I'm going to do. But I'm not like, oh my God, this is so expensive, I only have 3 days. No. I'm like, it's going to come in. It's going to sell off. Let's do it. You know what I mean? And that's like how I look at it. What about a contra move? A big gap down at 9:30 and then a rally rollover. I don't know what you mean. There are times where a gap will rally and not fall. Now, if I might have rated it and it didn't rate good, so that I'm not doing it. Remember I said I'm never buying a gap down. So I'm never flipping it, if that's what you mean. If I would have rated it, and if I take a trade in it, and if I lose in the trade, then I take a stop. And that's that. That's the end of the story. So again, the whole idea is to follow the system, and that means some trades are going to lose. I mean, I don't have a 100% win ratio. So again, you use the system, but I'm not flipping it. That's what I was talking about, you know, like a pancake. I will tell you that in 17 years of trading, gap fills do not work consistently. So for every one that I might short that I get stopped in that rallies, I make money in 1,000 others that go. So it's sort of like, do you know what I mean? You're playing the odds. Like at any point, you're always playing the odds. Like that's why I'm saying don't take risk for risk's sake. That's the whole point of doing the checklist. Again, this is the whole point. I don't just say, I just don't roll out of bed and trade at 9:30 or when I open the room at 9. I do this. Like I'm not like fudging it. Like I do it. I've been doing it for as long as till I invented it. You got to do the work. It's not like, well, I think this one is a maybe. No, it's a tool. You use this tool. You have to use the system. And if you do and you follow it, and you only do gaps that rate 20 points or more, in a calendar year, you're going to be successful. Yeah, you're going to get stopped in some that lift. That's it. You move on. Or you can retake it. I'm not going to get into details about entries. That's something I teach in the class, Stuart. If you're saying, does everything fall off a planet when it opens? No. Not everything does fall off a planet when it opens. But you're talking about the entries now. I have 6 different entries I'm looking at. Everything sets up differently, and you don't know. You don't know until you see the setup. But that is something I teach in the class, which is the entries. But I have no problem with the stock rallying, if that's what you mean. I don't short everything on the open. I never said that. I never said that. Never ever said that. You're like, what if it rallies? So I never said I short like as soon as something opens. I never said I do that. I'm rating it, and I have my bias, and I like it, and it rates good, or if it doesn't, I won't watch it, and then I have to wait for the entry. And again, that's the day Sunday in the class. That's the whole day on Sunday. So I'm never doing anything actually on the open. In fact, I don't do options on the open either. You have to wait. Okay? And especially since they're spreading too on the open. Anyways, we're talking about conviction. Learning helps your conviction. It really does. Really, really does. And then you develop this over time. And that's how you get stronger. And that's how you build up your account. Anyways, the class is called the Golden Gap Course. This is a class on how to find, pick, and play professional bearish gaps, which is a main class that I do once a month, which is a bearish class, which is June 7th at 8. Cost of the class is $69.99. You can be anywhere in the world and take it. It's 9 a.m. to 5 p.m. I always do the class on a Saturday and Sunday. This class is online. All my classes are online. For Memorial Day, I am doing a special package. I'm going to go over it here. It's a shame it's raining because Fleet Week started. But the bearish class is June 7th and 8th. The bullish class I'm doing this month too, which is June 22nd and 23rd. I don't do this class all the time. You will learn professional bullish classes or gaps if you want to do this class. It's just not a class that I do even every year. So I've had some people asking about it because we've had some bullish setups. So I'm doing this in June, the weekend after Father's Day. And if you want to sign up for both, you get a discount by paying for both. You would pay $9.99 instead of paying two separate prices of $7,000. And the Memorial Day special is you will get the Wealth Manifestation course, which is in July, free with this special if you sign up on Memorial Day for any one of the classes. The bearish class, the bullish class are both. And then you get all my trades free to the end of the year. The options newsletter, the trading room, and the market report subscription until the end of 2025. And again, some people have already signed up, and they started on Monday when I launched this special. Any questions here? We're a little after 5. We're doing good with time. Any questions? Anybody want to ask me anything? Good questions today. There is not solely a trading room membership because you must have taken the class to be in the trading room. That is for subscribers or members who have taken the Golden Gap class only. If you want to get my options trades, you can sign up for the options newsletter. There is no prerequisites for the options newsletter. It's $49.99 for 6 months or $69.99 for 12 months. And you can go to the website here and look at all the subscriptions. But to enter the trading room and to join, you must have taken the Golden Gap class. That is a prerequisite for the room. The trade's set up very quickly, and we go over proprietary information in the room, which I wouldn't be able to do. And I want to teach in the room. I want to talk about stuff in the room. I want it to be open to help with continued education. So you've got to do the Golden Gap course, whether it's bearish or bullish, either one. You got to do it to join the room. But like specials like this, where you get the room and options free, it's totally worth it. So you can just sign up for the bearish class in 3 weeks or 2 weeks, whenever it is, and get the room for the rest of the year. Any other questions? Again, I see some new people, and I also see some people I've seen before. How's everyone doing? So some of you have to look into the information about setting up your accounts to do options correctly, changing them to cash accounts. Call your broker about that. What else? You got to look into see if you can short. If you want to have a margin account or an options account, you can look into all that. Again, what you have to decide is if you want to learn the system. Like, are you interested in gaps? Like, is this something you think you might be interested in doing? You know, that's really what you have to decide if you want to come and join the group. You know, and also if you like shorting, because we mostly short. Again, while I sometimes go long, I'm mostly short. But the concept of what we do, again, is based on momentum. Whether it's the option, whether it's a day trade, either way. Listen, have a happy Memorial Day. If I don't see some of you, I'm going to try to enjoy myself. Hopefully the weather will improve. If you want to email me, if you'd like to sign up, you can email me here. If you have any questions, you can email me or call me. You're welcome. Very good. Have a good evening.